Ladies and gentlemen, good day and welcome to the Q2 and H1 FY23 earnings conference call of Suven Pharmaceuticals Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rishabh Barar from CDR India. Thank you, and over to you, Mr. Barar.
Good day, everyone, and thank you for joining us on this call to discuss the Q2 and H1 FY23 earnings for Suven Pharmaceuticals. We have with us Mr. Venkat Jasti, the Managing Director, and Mr. Venkat Raman Sundar, Vice President Corporate Affairs, and Mr. Subbarao, CFO of the company. Before we begin, I would like to mention that some statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. Documents relating to the company's performance have been mailed to you earlier. I would now like to request Mr. Jasti to share his perspectives on the performance and outlook. Over to you, sir.
Thanks everyone for tuning in for the call, earnings call for the quarter ending September 30th. As you know, last conference call I have mentioned this year is going to be a flat year, a 5% reduction in the sales amount. That is at that time and the visibility, based on the visibility what we telling that time, and that shows up in our results also. We have the results, as you can see, there's a degrowth in the CRAMS, and whereas the growth in the specialty chemicals. And also that reflects on the product mix also, the reflects on the profitability. But since that time, we were thinking that 23 will have a better traction, 23-24. But we see a better traction since the last call I had with you. And now I'm glad to inform you that we will not be underperforming. We will be more or less performing the same range as last year as far as the sales are concerned, based on the visibility we have, and also based on the traction that is having in the movement of the molecule, the project, and also the interactions we had recently at the HI with innovators themselves. They are saying, next year is going to be coming back to the normalcy. So even though it is a quarter-on-quarter, it is a degrowth, you see it, but on a happier basis, it is on the same range as last year. And we hope to perform a little bit better than what last year is all about based on the visibility we have. So, in a nutshell, that's what it is. But also, there is a lot of calls coming to us based on the newspaper reports or whatever it is, for which that we have clearly indicated to the stock exchanges, informed them. As since we get to so many opportunities and offers throughout the years, we keep interacting with the people that are coming with us. As you know, this is happening since 2019 during the demerger time itself, and since that time, so many things are happening. So as a forward-looking company, we keep exploring various strategic ideas that are in the interest of the company and creating a value for all its stakeholders. But I just want to leave you with that thought, because there is nothing concrete about anything, and these are all the hearsay things, and I don't want to comment on those things. And if anything is happening, you will be the first to know, because we'll be giving the same day the news. So with this, I think I better give the things to the question so that you'll give more clarity rather than me giving the upfront assessment.
So can we begin with the Q&A?
Please.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sudarshan Padmanabhan from JM PMS. Please go ahead.
Yeah, thank you for taking my question. Sir, while you did elaborate that largely the sales is in line with your thought process, but if I look at the second quarter margin, I mean, as you mentioned earlier, the mix was adverse and therefore the gross margins was lower. But so was the negative operating leverage, below the gross margin. You did, said that, maintain that the margins would be over 40% plus, excluding the other income. So would that understanding be right as far as mix is concerned, that probably the mix towards pharma would normalize in the second half and therefore the margins even from the second half would be better?
Then I keep telling maybe over the year, you cannot go by quarter-on-quarter basis because of the product mix and the various other things. Movement of the projects not going the last week, it may go into the first week of next month after the quarter ended. All these things will play a role. But the guidance of 40% plus EBITDA margins over the throughout at the end of the year will be we are giving you that guidance.
Sure, sir. And sir, on the mix as well, I mean, should we assume that, if I look at the mix this quarter historically, the pharma has been contributing between 55 to 60% of the overall mix on sales, which has dropped to 40%. So this should also normalize as things moving forward?
Yeah, as you go into the over the years to go, because this year, this quarter, especially the cramp is less, and only 40% and 60%, as you rightly said, 60% is specialty chemicals. As you know, the profitability is there is a differentiation in between these two, but over the year, over the quarters, it will normalize.
Sure. And sir, one final question from my side is, we have a very strong pipeline. I mean, have a pretty, 5 to 6 products on, the phase 3 on the pharmaceutical side, about 2 to 3 molecules on the specialty side. And, we are also embarking on this capex of 200 crores annually and plus, also investing into the formulation side. I mean, just to, get a sense, I'm not talking about specifically quarters over here. Now, directionally, if you are looking at, the phase between, say, that FY18 to FY20, where we got, a spate of commercial molecules coming in and the growth was, significantly higher. I mean, that was really a very good time for us in terms of margins on every aspect. So over the next 3 years, do we expect, a fair lion's share of these molecules coming into commercial and, probably the growth prospects coming back very strongly? I'm talking about over a phase of, say, 1 year, 2 years, rather than 1 quarter, 2 quarter, 3 quarter.
As I was telling all the time, my visibility is only 6 months. As of now, nothing is told by the customers that something is moving to the next level. As you know, we have 5 molecules, 5 compounds, which goes into the 3 different molecules. And they can come, but there is no guarantee in this business, as you know, because this is a 0 to 1. All 3 can move into the commercial, or maybe 1 can move, or maybe none can move. I cannot tell because that's the success at the clinical trial will give us the opportunity. Meanwhile, there are, as I was telling you, the traction is there, the movement is there, and some of the phase 2 molecules should move into the phase 3 also. And the resource, the other way also, phase 1 to phase 2 also. As the traction is becoming much stronger, I hope the success of the molecule, traction is one thing that gives you the at least the initial revenues and all. but as you rightly said, for the commercial only, that gives you better margins and longevity of the visibility. So that depends on the success of the molecule at the clinical trials. As of now, without having any knowledge from the customer, it is very difficult for me to tell whether this will certainly be a 1 out of 3 year, 2 out of 3 year, 3 out of 3 will make it, and none out of 3 will make it. I have no idea, sir.
Thanks a lot. I have more questions. I'll join back.
Okay.
Thank you. The next question is from the line of Darshik Shah from Nirvana Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, if you could tell us more about if this quarter had revenue of the COVID drug that we did commercialize last 6 months back, and if you could quantify or give a broad range where how much is this contributing to our top line?
This quarter, nothing. It's very small amount, but likely to go in the next quarter, if not certainly the fourth quarter.
Right. And sir,
it's based on the requirement at the innovator level.
Got it. And sir, how much would that be? Would you be able to give any quantification, or you won't?
No, at this time I cannot give the only post facto I can give the quantification, because if I say something, then tomorrow somebody will come and say, how come you said so much and it has not gone there? Because it's a dynamic thing, it's not a regular product, it is a requirement of the customer. And as I was telling, this is a one-off kind of thing. This year we had an order that will be delivered before March. But the next year we are only counting 50% of what is going to do from here. But unless it changes in the direction, and then things can go on. So it's very difficult for me to tell, but I can't put a number right now.
Got it. And sir, when we are hearing or viewing and talking to different management, we are hearing that the opportunity of the Indian CDMO players, given the cost rise everywhere that's happening in Europe, US, is seeing good amount of traction for quite a few of the Indian players. So what's our view on that, and are we kind of seeing that kind of normal traction which we used to see earlier?
What is it again? Question is?
Sir, my question is pertaining to, given the cost rise we are seeing in Europe and US, and that's giving a lot of opportunity for Indian CDMO players. That's what the management are saying. So are we also seeing that kind of attraction in terms of inquiries or such things?
No, that may be true for the generic denominated players, but in general, what I said, the traction is much better is because the innovators are now going into the normalcy, and more projects will be started by them. That means more RFQs will come, and also the speed also will go because targeting for the COVID is gone now. Now we are progressing on the regular molecules, and that is giving a traction. Clinical trial is being done on a much faster pace. That also gives you some traction. But on a cost basis, not really for us. But then eventually this may come when the new projects which are supposed to go to other countries may eventually come to India. But as far as the innovator firms concerned, not many players outside the other countries. So we see the traction, but not so like a China plus one kind of thing like in generics.
Got it. And sir, lastly, when we are seeing that we are kind of exploring opportunities for us, actually, and we are meeting people, obviously I understand that those are the people who are coming to us and not we kind of really going to them. So, sir, strategically, if you could broadly throw some light on what we are looking at now when we say probably a stake sale, are we looking at a very strategic stake sale, or probably promoter giving significant kind of stake at a given value we are getting from someone who's offering good value? So if you can throw some bit of light, that is probably clear there.
See, we never look for anything other than the strategic option. If somebody comes in, we listen. we don't say no to them. And what they bring to the table, we don't know. There are various people that are coming. There is is that the value add for us or not? Is it going to give a long-term benefit or not? Is it going to be matching with our requirements or not? All those things we take into consideration. It can be anything. It can be or even merger with somebody else, or it can be whatever they bring, strategy collaboration they bring into through the fund institution or whatever it is. Already they have a partner with them. They would like to be a part of that one. So we listen to them. I mean, whenever those upsets come, this is not the first time, and this is happening since 19. Only we take in the option of getting a value-added thing like a gas, so eventually that's based on our capability, our money that we have. But if we have to take a little bit bigger things, then we need to involve third party also. These are some of the things that are coming into the things, and we have not yet taken a decision, anything, because only when we take it up and we'll be able to give you a clear picture. And we are open, but it has to be a long-term benefit and with a shareholder value creation. And it should be because we cannot take the run-of-the-mill kinds of things, because the business model is different compared to others. So all those things we need to consider.
Thank you. Ladies and gentlemen, we request you to please limit your questions to 2 per participant in order to ensure that management is able to cover all the questions from the participants in the queue. Should you have any further questions, you may join the queue back. The next question is from the line of Abdul Kader Puranwala from Elara Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. So just wanted to understand that you maintained your guidance, but second half from a product mix point of view, would it look more skewed towards pharma, or the run rate what we are seeing right now in specialty chemicals that will more or less largely continue for the next couple of quarters ahead?
No, it's a combination of both. It's both.
Oh, okay. And so in terms of the CDMO pharma space, how many molecules would be there in the commercial phase right now?
8.
8. And does that include the COVID one as well?
Yes.
Okay. And so just a final one on the Vizag side. So has the site been inspected by any of the customers, or any color you could provide with regards to the commercialization starting from that would be helpful?
No, because see, if the same customer moves same product from one unit to other unit takes a couple of years. In this process, there are 3 customers who are regulars. They have taken a validation batches in Vizag. I think that will give us another 6 months. That way, whenever the requirement comes, the next order can come and go to that place also. So within next 6 to 9 months, these validations will be taking place.
All right, sir. I have a few more questions on the then won't take you. Thank you.
Thank you. The next question is from the line of Rashmi Saketi from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity. On the specialty chemicals, earlier I think you guided that, it would more or less be for year. But in the first half, we are seeing, good 21% growth. So are the sales coming from the existing 3 molecules, or, any new molecule has been commercialized in this?
As I said, there is no third molecule. There is only 2 molecules, and we clearly said only 1 quarter that third molecule was there, and this will not come back until 24 end. Similarly, the 4th molecule also will not come back until 24. That's why we said a flat growth based on the 2 molecules plus small scale of the third molecule. So as of now, it's only 2 molecules for this year.
So, but you said in your guidance for specialty chemical business earlier, when we expected flattish growth for the year, or we expect that, the second half would also be better and therefore the growth would be much higher?
It may not be much higher. It is because there are two businesses. It will be maybe a 5% more than what we thought of. That's not much higher.
Okay. You mean to say for the full year, maybe 5 to 6% on FY22?
Right. When we thought it's a flat, but it may be 36% more.
Okay. Sir, and on CDMO Pharma, in second quarter of FY22, how much was the COVID sales product? Can you quantify that?
I don't have the number. I had it.
I mean, usually we don't really quantify individual molecules size within the overall portfolio. Because it is being a COVID as one-off, we checked that what was the quantity which may not get it again, which is like one-off. Otherwise, we don't really give the split details of individual molecules commercial.
Okay. So, sir, then in second quarter, whatever lower sales which we have done in the CRAMS, it is generally the sales which had gone low, or there are any deferment of the orders which is expected to come in H2, and that is why you're guiding that, H2 we will be performing better.
Yeah, sir. It's not only the good visibility and the orders, but also some deferment is there that also is like, that's why we said that it will be.
Okay. Okay. So can you quantify how much orders have been deferred, from second quarter, which will go in third quarter? Any number, if you can quantify?
We already told the earlier caller that I cannot tell. They may go in the next quarter or may go into the fourth quarter, but at the end of the year it will go. But I cannot give you a quantification of each and every item, how much it is. I only give you the way things are moving so that you will know when I said I'm going to make it to last year's numbers, I will make it. Because originally I was selling 5 to 10% less, but this time, based on the, what we call the traction and also the visibility and also some of the things that are existing, we are confident of reaching and surpassing that number.
Okay. So then on your overall revenue guidance, you stick to it that, we would be doing a flattish growth on a high base of FY22.
Yeah, it's not a little bit, back the number. It's not flattish. It will be maybe 2 to 3% to 5% growth will be there.
Okay, 2 to 5% growth would be there. And sir, on your gross margin, in this quarter, we are seeing that quarter on quarter there is a dip. It is only related to the business mix because we have a higher specialty chemical business and lower CRAMS, or is there any other forex element or anything which has impacted it?
I mean, it's now many things because as you know, it's 60-40 towards the specialty and also some other things which is made and deferred to the next quarter. And so it's many, but at the end of the year it will match out. And if you see half year, it is almost same. So the guidance will remain the same, like the first 40% EBITDA margin by the end of the year for sure.
Thank you. The next question is from the line of Hussain Kagzi from Ambit Asset Management. Please go ahead.
Hi, good afternoon, sir. First thing was just a clarification to an earlier participant's answer. You said 8 molecules in commercialization. That is including specialty chemicals?
No.
That is for pharma that we have 8 molecules in the commercialization. Okay. And the other thing was just to get a quantitative sense of the total projects that we have in pipeline. I know we don't share the number, but how is the total projects looking, say, compared to a year or 2 years back? And is it growing? Can you give some sense over there? Because eventually those will translate into revenue, right?
Yeah, but they are more or less flat on the number side, but at the same time, the movement is, we see the traction much better, as I was telling, and the movement of the new order, new RFQ should be increasing certainly in the next year. It's not so that based on the conversations we had recently in the CBHA show.
Got it. And are we also getting any molecules or compounds in later phases, we say like phase 2 or phase 3, where the requirement from the innovator is that they need to fast track the manufacturing for that? So are we seeing some kind of projects like that also?
No. We see the normal thing only. I mean, it can be either phase 1 or phase 2 and 3. That's all it is. Unlike the COVID molecule, nobody comes suddenly into phase 3 and give you a molecule that it has FDA regulatory filings and all that stuff. So that kind of thing is not happening. Only the new molecule, new offering is increasing. New requests for quotations are increasing.
Understood. And the last question was, what is the update on the capex that we were undertaking, and is it going on plan and any future change in the capex plan? And also on formulation segment, if you could give some update, what is the outlook in the near term that you are seeing? Thank you.
Capex is, as you know, we have told them that it's a futuristic and the replacement capex, but one of them we started only. We spent about 1/3 of what we are supposed, spending, and the rest of the 2/3 for that site at Purified will be spent before the end of the fiscal, March 23rd. And with respect to the formulations, we got the FDA approval, as you know, but at the same time, the goal date for the molecules filed for that will start. One started, but it's a small one, but it will start sometime in March onwards next year. So we expect some revenue accretion to take place. From the beginning, we were telling it is not 22-23, it will be 23-24 onwards.
Understood. Thank you.
Thank you. The next question is from the line of Amar Maurya from Alpha Accurate Advisors. Please go ahead.
So thanks a lot for the opportunity. So couple of questions, sir. First thing is that you said that now likely to perform in line with the industry for the second half. So are you changing your guidance? At the starting of your call, you had indicated something like that. So just wanted to understand what was exactly that, how the second half for the pharma and for the specialty CDMO looks like, sir.
The thing I told is last time when we spoke, we said it will be a 5% less compared to last year or a flattish year. But we said based on the visibility and all that stuff, we'll just surpass that. Maybe 2 to 5% earlier I was telling 2 to 5% growth will be there on the overall. So that way, and also second half looks good on both fronts, both on the pharma CRAMS and specialty.
Okay. So when you say the second half looks good, so I'm trying to understand. So in a second half versus second half, are we going to see some growth in this? Because I believe CDMO pharma, otherwise there is a high base, right, of the COVID molecules, which was there largely in the second half, right?
So, totally what I'm saying is total sales we are surpassing compared to last year. And it will come, you will know as and when it comes in, but right now I cannot give you which is a split on that one. But totally we are saying that the guidance instead of -5%, it may be +2 to 5% rather than the flattish growth.
Last year the overall revenue was about 13-20 crores. During the last quarter, we have informed that it will be more or less trying to meet that. Despite the COVID-related molecule which was there as one now. However, as we are in the last 6 months, now, we have a better visibility based on this. It looks like that we will be surpassing that 13-20 crores overall, which includes the mix of, pharma products, which includes commercial, as well, specialty chemicals. All put together will be crossing, it will not be flattish. There will be a minor growth, which could be 2%. If you are lucky, it could be as much as 5%. That's what we are trying to do at this point. Based on what it is like, last 13-20 of last year's turnover, for the 6 months we have achieved about 617 crores, which means that if next quarter, next half, obviously it has to be better than the first half to reach whatever is we are talking about 13 crores. That's what it is.
Okay. So basically, that way you are saying that second half would be better than the first half.
Correct.
Okay. And in terms of the gross margin, overall, we maintain that guidance of the full year kind of a gross margin?
Yeah, we clearly said we will be having a +40% EBITDA margin for the full year.
For the full year. Yeah.
Yes, sir.
So basically, this is basically based on the product mix, right? So probably, at the end of the year, we will know exactly what it could be, but we always give a guidance of 40+.
40+%. So basically, sir, if I see average, I think even in the first half, the average is around 40%. So basically, what we are saying here is in the second half, in terms of the EBITDA margin perspective, also it will be better than the first half?
Yeah, to meet that, it will be growing, right? If there is a pharma CRAMS to specialty chemicals, the ratio changes. So this will also slightly.
Okay.
We are giving basic guidance.
Yes.
Okay. Okay, sir. And how, sir, then FY24 will look for us?
It is too difficult to say at this point of time. We always give guidance only for 6 months.
Qualitatively, customers are saying they are coming back to normalcy, and that should lead us to better traction and better opportunity. So other than that, I cannot say anything.
We are not able to quantify at this point of time because we always go by the order book position. Very difficult to predict everything.
Thank you. We'll now move to the next question. Participants, we request you to please limit your questions to 2 per participant. The next question is from the line of Cinderella Carvalho from JM Financial. Please go ahead.
Thanks for the opportunity. And so I just wanted to understand your view as you're indicating that we are, in terms of R&D projects, inquiries, we are reaching the pre-pandemic level. Can you help us understand the traction a bit more from our perspective and from the industry perspective, depending on your interactions with the industry participants?
As you know, over the last 3-4 quarters, the number of inquiries are less. Maybe 7 or 8 or something like that. And now they are going to almost doubling to that level. So doesn't mean all the RFQs will mature into a commercial, people placing an order and all that stuff. But eventually that will add up. So similarly, based on the interactions we had after 2 years, we are meeting first time many of the customers during CPHI. And they are also hoping that, not hoping, they are saying that they are coming back to normalcy and the next year budget should give you better traction and the new molecules that they are going to concentrate on compared to the repurposing of the old molecules for the COVID-related activity, which was the case for the last 2 years. So in that basis, also the speed with which the clinical trials happens also gives us the based on the success, gives us more opportunity for us to get the revenue. So all in all, the traction looks good. And whether it will ramp out to be a real positive, it's always a lag time. Is it 6 months to 9 months or it is 1 year to 2 years? So that's the question. So the only time will tell on that.
That's helpful. And so if anything that you would like to highlight on our hiring of new CEO, any update on that which you'd like to share?
No, nothing has happened. And it's very difficult to get somebody on a commitment basis for the long-term basis. So we are still trying in-house growth, bringing in people who are working from our organization. That also taking time. But as of now, it takes another 6 months before I can have any concrete proposals.
That's helpful, sir. And if I can squeeze in one last question, what I understand is our overall traction will be better in the second half. But given that there are certain price easing or the raw material inflation also easing, does that carry forward into the next year also? Is that the understanding correct from the margin perspective?
Yeah, you may have the raw material prices goes down, but the other things is going up on the environmental angle, year-on-year expenses going up, and secondly, the fuel and power costs also going up. So it's a mixed bag, but right now, second half, we're telling based on the visibility, but the future, we are taking off on the qualitatively based on the interactions we had with the customers.
Thank you. We'll move to the next question from the line of Ranveer Singh from Edelweiss Wealth. Please go ahead.
Thank you for taking my question. So my question was related to that Casper Pharma. We had an inspection, yes, the inspection in July. So for 3 products we have filed. So wanted to understand what's your status there. So when we can expect commercialization of this product, or where we are in approval process stage.
Yeah, as I was telling, answering to the earlier caller, we have filed 4 ANDAs. One we just launched, but it's a very small value. And the next goal dates are starting in March of next year, March and June or something like that. And we are, during this time, we are going to file another 6 to 8 ANDAs within the next 12 months. So the revenue generation, if at all, will be happening during 23-24, so not much during 22-24.
Okay. And just a general question on CRAMS side, because we saw other players in CDMO business also reporting a weaker number. So wanted to understand at macro level, is there any shift or any change or sluggishness in demand, or if you have witnessed any slowness in inquiries? So any of this sort of indication are you witnessing, or this is just a cyclical things that happens more often, and next quarter we'll see most of these coming back?
The CDMO has 2 different connotations. These are regular products or innovative products. Innovative products are depending on the specific molecular declinity trial. We are saying this year it could be a negative growth, but at this point flattish growth. Now we are saying we are going to suppress that. And this is despite the additional revenue we generated in the COVID, which is not that much going to be in this year. So that means it's actually there, but and based on the qualitative interactions with the customers, and they are coming back to normalcy, that should lead to give us more opportunity. Doesn't mean that will give us a generation of the revenue, because at the end of the day, it is the success of the molecule at the clinical trial will give us the more benefits. So it's as and when it happens, as I said, as of now we have only 6 months visibility. Based on that, we could give you better than last quarter's performance for the next 6 months.
Okay, from a perspective, I wanted to understand, like after COVID, during COVID, there was a lull in demand. There was a slowness in clinical trials, so there was a significant fall in new inquiries. And then again, there was a pent-up type of demand just after the COVID. So then suddenly the inquiries started, gearing up. So that I wanted to understand, is there any angle here that because after COVID, there is a lot of inventory supply inquiries has already been met. So now there is some sluggishness or some slowness here in this quarter. So is there any kind of, this traits you are seeing in the business?
No, I mean, it's one thing, as I was telling you, until now it was slow, and the customers are saying they are getting back to normalcy. Not only that will lead to more opportunities, and that will be shown in our next 6 months also. And hoping that will continue in the new year also. That's what our hope is.
Thank you. The next question is from the line of Rohan Samant from Multi-Act Equity Consultancy. Please go ahead.
Hello. Am I audible?
Yes.
Yeah. So my question was on the number of molecules that we have in the commercial phase. You said that we have 8 molecules in pharma CRAMS. So I think earlier we were saying that we had 5 products. So are these 8 molecules from those same 5 products, and different variants we are counting as different molecules, or we have had incremental molecules flow into the commercial?
Yeah, there are a couple of incremental molecules, mainly for the retroviral, and that is not going to give you too much of a volume in general, but only the numbers goes up because they are launched in something in last year first quarter or this year first quarter. So that's why we said We thought because being a very small volume, we never know that it is in the phase 3 also, because it's very difficult for us to know until it goes into the commercial, because they do not divulge what stage therapeutic area and what stage it is there. So a couple of them were assuming the phase 2 actually based on the quantity. They were when we find out that it was in the what you call the launch stage. So, but the volumes you cannot write it, even though the number goes up. It's only a very small volume, like a phase 2 value, like only. But the numbers have gone up to 8.
Okay. So out of the 8, 2 are such smaller products, right?
Very small volume. Yeah.
Okay. And one incremental large product has also gone into commercial, because we had 5 earlier, right?
No, that was the Paxlovid thing. No? 6 was the Paxlovid thing.
Oh, okay. Thank you. Yeah, thank you.
Thank you. The next question is from the line of Ayush Vimal from Clearview Capital. Please go ahead.
Thank you. I have 2 questions. Is there any discussion with customers on forward integrating into API manufacturing? I think you had updated last quarter that some of these discussions might start.
Yes, we have the customer, I know what we call, we have the interactions with them, and it will be, as I said last time itself, it will start sometime in the year 2023, because now only they started, traveling and all that stuff. I think this is the end of the year for them. The year is usually the calendar year. I think they will plan for some time in the next year, and hopefully, 2 or 3 customers show interest. But we see different departments compared to where we work with them, because we're in the developmental cycle. So they are in the mature cycle and in generic cycle. So we are looking in that direction. It will start next year.
Okay, thank you. One more question I had was on the capex of 600 crore that we earmarked for the next couple of years. Just to clarify, this is entirely replacement capex, and this is not going to increase our capability or capacity in any form, right?
No, this is one is Suryapet is replacement capex purely that is going on. That will be finished before the end of the year, because that's a 35-year-old unit, so you need to have a new block. And where the second one is contingent upon the government asking us to move out of the Judimet law for the R&D side, which we just taken permission from the board for 200 crores. That we don't know, because only when the pharma city opens, I think then they have asked us to fast forward our activity. So nothing is being spent on that. Only 150 crores is for the future capex, and that will based on the traction of the molecules that are there, because it is you have to do proactively. I think if it will be done sometime in 23-24, not right now.
Got it. And if I may just squeeze in one more question, do we have any escalation clauses built into our contracts, given that we face raw material escalation? Are we in a position to pass it on to our customer? And if yes, then with what lag?
See, in the craft business, because they give you only once in a year, and when once you take the order, it's already taken care of. But when any increment in the raw material happens and the repeat order comes, you can charge. But when once the order is placed, nothing you can do. But on specialty chemicals, that will be in a regular basis, so that we'll be requesting, and if the prices have gone up by more than 10%, then it will be a split of the price. Split of the escalations will be given it to us, and that's the only way you can get the escalation clause.
Thank you. The next question is from the line of Darshik Shah from Nirvana Capital. Please go ahead.
Yes, just one question on the cash and cash equivalents, including mutual fund investments. What's that amount at the end of the quarter?
The total right now is about 354 crores, of which the investment is about 292.
Okay, 354 crores as on September.
Yeah, total cash is about 350 crores, which includes investments in various bonds, actually, about 292 crores.
Thanks.
Thank you. The next question is from the line of Abdul Kader Puranwala from Elara Capital. Please go ahead.
Yes, sir. Hi. Thank you for the follow-up. So just on this 8 molecules what you have commercialized, would it be fair to assume that in the quarters ahead, it would be the only 5 projects that we had previously would be contributed to the revenue, while on the other 3, it may or may not contribute ahead?
They are equally distributed. You cannot say that which one contributes because we have an order book for next 6 months which we are able to give. There are certain deliveries. Few of them are to be delivered this quarter and then following quarter. Sometimes they may ask us to defer for about maybe 1 quarter kind of thing. There are cases where it happened actually they wanted us to supply much ahead of time which we did actually. Like last year also we did, in the first quarter also we did. So this is based on the one thing is like we don't have can say like that. It's all based on the order book, and they are pretty much distributed. It's like we can't say that actually whether the contribution is going to be there only for 3 products, 4 products, because some of them will be there, a small quantity. May not be a big quantity, but it may be there.
Sure, sir. Got it. And so lastly, what would be the fixed operating cost of the Vizag and the Casper site, if you could provide that number?
No, Vizag, we are not giving plant-wise cost.
Okay. All right, sir. Thank you.
Thank you. Participants, if you wish to ask any questions, please enter star and 1. Ladies and gentlemen, as there are no further questions, I now hand the conference over to management for closing comments.
Jane, thanks again for tuning in for the earnings call. And as I was mentioning last time, and was talking to all of you who were not sure about the traction, and hence we gave a guidance of flattish to minus bias, so 5% minus. But based on the next 6 months visibility and the qualitative interactions with customers and the movement of the molecules and the order book position, so we say now that we will certainly surpass last year numbers with a positive bias. And with the normalcy coming into the global innovation arena and the clinical trials being fast-tracked for the new indications that are meant for us originally, and based on that, we hope that 23-24 will be a good year, but I cannot give you any quantitative guidance on that. With this, I thank you everyone, and hope to catch up with you in the next conference call with quarter 3 results. Thank you one and all.
Thank you very much. On behalf of Suven Pharmaceuticals Limited, that concludes this conference. Thank you for joining us, and you may now disconnect.